Good evening, everybody. Welcome to Zoom at 8. My name is Julianne Peterson, and I am your host every Tuesday night. We've been doing this for almost 7 years. 7 years every Tuesday night. You'd think I could get a life after 7 years, but no. I want to provide you guys with an opportunity to meet other investors, but also get into the room with our industry experts. And tonight we have Domingo Valadez. He is somebody that you want to know. We're going to have him this week and we're going to have him next week. He's going to talk to us tonight about capital raising. So I'm excited for you to hear what he has to say. And then next week, we're going to talk about his software program called Homebase. So both will be advantageous for you. Invite your friends. But here's the deal. I am here to not only connect you with industry experts and investors, operators, general partners, but also to have the opportunity to provide your debt. I want to make sure that you know how it is done. How do we get these deals done? So if you're looking at a deal right now, I would like to see how you're underwriting it. We will bring your deal to our lenders with a T12, a rent roll, your underwriting, and an offering memorandum. We'll package it up. We'll send it over and get it back to you in about 48 hours so that you know exactly who your biggest partner is, which is your lender, who's going to be bringing anywhere from 60 to 80, 85% of your deal to the transaction. So get to know us. Also, make sure that you're subscribed to our YouTube channel at Zoom at 8, and make sure you subscribe there. Money does not come easily, and it won't come easily for the next couple of years. And that is why we have Domingo Valadez in the house tonight. So I am very excited for you. We're going to transition to listen to our industry expert, Domingo Valadez. He is the founder of Homebase, which, as I mentioned, we're going to go through the Homebase next week. He's going to walk us through a whole software, how he's designed it. He is the founder, as I mentioned, of Homebase and host of Groundbreakers podcast, where he interviews real estate operators and entrepreneurs about how to raise capital, how to scale platforms, and structure deals. Previously, he was a product strategy lead at Google. So Domingo has personally syndicated 2 real estate deals and built an investor base of over 5,000 accredited and non-accredited investors. After experiencing firsthand the friction syndicators face across fundraising, investor relations, and deal administration, he began building Homebase to simplify the process, the entire process. So tonight, I am honored and privileged to welcome Domingo into our small space here to help you understand what is it going to take? What are the steps we need to do to raise capital? So welcome aboard, Domingo. Glad you're here.
Thanks so
How
much
are
for
you?
having me, Julie, and appreciate you giving me the opportunity to share more. Let me go ahead and just share my screen because I do have a presentation for everyone of just different pieces here. One second. Can you all see this?
Yes.
All right, perfect. Yeah, so as Julie mentioned, it's a really tough time to raise capital. Interest rates are up. I didn't go to the conference last week in Vegas, unfortunately, but I did hear that folks think we're at the bottom of the market now. Um, you know, you're getting better terms from lenders. Have like 50 plus conversations a month with different GPs. We're pretty bullish going into this year. I think last year was like, survive 2025, make it 2026. And I think now we're here and, people would argue they're at the bottom. Who knows? But I think GPs in general are bullish because, we're in the business of doing deals. So excited to share a bit more. So before diving into some of the playbooks that we've built around capital raising, want to give a bit of background as to who I am and why I'm even here sharing a bit about this. So as Julie mentioned, I'm one of the founders of Homebase. Prior to building Homebase, we actually started off as a crowdfunding platform, and we syndicated successfully 2 different deals using that model. In that journey, built an investor base of about 5,000 people. And I'm happy to share how we did that. And I'm now also the host of Groundbreakers. We've released over 95, about to be 96 episodes with different GPs, all investing in different asset classes within real estate. We've had folks doing, self-storage, assisted living, multifamily. So if anyone's trying to just hear first-party perspectives of the difficulties of raising, some of the insight they've had around modular housing, of any of that nature, check out the podcast. We've had some great operators in the show. Um, but yeah, how I'd love to use the time is first just kind of giving you the story of how we built Homebase and the experience we attained from that and building that user base. Then, how we built the user base, and we put together a 5-step playbook. Went to a few different mastermind communities, saw how they were kind of sharing some of those insights, so decided to kind of build my own based on my experience and share that. And then talk a little bit about how we help sponsors at Homebase directly. But we'll be doing a more in-depth conversation around that next week. So yeah, first to kind of share the backstory about this. So, I've been in the Homebase journey over the last 4 years as an entrepreneur. Um, we launched in 2023 as a crowdfunding platform. So believe it or not, that's our website in the top left. We used to let anyone invest in fractional real estate for as little as $100. Now that we're in the syndication space, tough to manage that many investors when you have folks literally putting in like 100, 500, $1,000 per deal. But we did 2 deals using that model. Went viral a few times on social media. We actually got called out for folks that know a little bit about crypto. We were actually using crypto as like the software backend for this. So went a bit viral, built an investor base of 5,000 people, as Julie mentioned, and did that all in about a year and a half. Realized that it was a very tough business to scale. I'm sure you guys have heard of like CrowdStreet, Yield Street, some of those marketplaces. Interest rates went up a ton in a very short window, which no one really foresaw. And so we had to pivot the business. At the time, this is now early 2024, we had GPs who's reaching out to us being like, hey, we've seen you guys, we've seen you raise for these deals successfully. Can we use your platform to host our own deals and, use the exact same tools that you did? And so we kicked off that pilot. A year ago, we had 8 customers in total, and now we support over 125 sponsors with a little bit over 300 million funds under management. So it's been quite the journey. In this, been able to chat with just a ton of different GPs, hear what they're working on, kind of refine the strategy for fundraising. But we do a lot to try to help our GPs. So going to be going into the playbook that we've shared now with a lot of folks. So, what we learned from building, this investor base and successfully crowdfunding these 2 deals and now helping different GPs, I'd say 3 key pieces. The first is this is a trust business. And I think you guys all know that. You're taking the time to be here, build relationships with other folks you can work with. A big piece is also building trust with prospective investors and those LPs. Oftentimes, people get so focused on the deal and like, oh my gosh, look at the numbers, like look at this spectacular deal. But no one's as into the weeds as you are. And you realize a lot of LPs aren't really investing in the deal. They're more so investing in you and like going back to the trust that you've built. It's about your brand. It's about, they know you. They think that you're going to be a good custodian of their money. And so, yes, the deal may be great or the deal may be okay, but they know that a great operator is what leads to good outcomes. So people are investing with you. And then lastly, you need more than just a pitch. You go into every conversation, you have your elevator pitch, you have your story. But a lot of times you get a ton of no's, especially in this environment. So you need a good system to move people down this funnel and ultimately raise the capital in a 30, 60, 90-day window that you have once you get something under contract. And so those really are like the 3 lessons that we learned from this. And so that's what led us to put together this playbook. And so I'm going to go into each one of these a bit more in depth, but at a high level, I'd say the first piece is put together an investor avatar. Know who you're speaking to. Speaking to a doctor is going to be very different than speaking to a teacher. They have very different, income levels. They have very different goals, dreams, time, what they're focused on. And so the messaging you're putting together is going to resonate very differently. Second, personal brand and how to build that. different avenues you can do that. All of that goes back to building trust with you as an individual over time. Then the funnel. So as you're having conversations, as you're, having multiple touch points with a prospective investor, where are they in that journey? Because you're educating people all along the way from, someone first learning about real estate for the first time to then someone fully trusting you to want to invest with you. Then the next piece is having a good CRM in place, whether that's, having ways to track prior conversations, adding someone to a drip marketing sequence. So, you're always top of mind when you're having conversations. And then last piece, I'm biased, but we do have data to back this. Back when we were crowdfunding, I think having an investor portal is really powerful. Whether you're using Homebase, whether you put together your own landing page, or whether you use another platform, some of the data we found back when we were crowdfunding, having a place to actually get soft commitments was super powerful when it came to actually raising capital. And I'll dive more into that when we get to that piece. But first, investor avatar. And so going back to, you're having a conversation with a doctor, you're having a conversation with a teacher, those are very different levels of messaging. And so, as someone who's raising capital, you should figure out who is that target investor. And ideally, that's someone that you can resonate with. Maybe, it's a career that you used to have. Maybe it's someone you relate to. Maybe your partner does that career, so you know all about it. You know their pain points, what keeps them up at night, what they love, what they care about. And so all the messaging that you're putting together is for that target person. So in the case of a doctor, they have high disposable income. They don't have that much time. They want to spend time with their kids, but they have all this money and they don't know where to deploy it. All right, well, I have a deal coming up. It's real estate's not very well, some are, but generally the mantra is it's not that risky to invest in real estate. And so you're giving someone the opportunity to invest in something that is not tied and correlated to the market, theoretically is less risky, and gives them passive income on a monthly, quarterly, or yearly basis. And so, that's the type of messaging that maybe you give to a doctor. You don't have enough time. I can help you get there. And so really it's just defining who that investor avatar is, understanding who they are as a person, and then building the messaging to that. And so try to be consistent with that messaging. And if you target multiple investor avatars, just have different types of messaging for them. And now in the age of AI, as Ria was mentioning earlier, things like Gamma, super easy to put together different presentations for different audiences. So if we're going to be having conversations with different investors, put those presentations together to resonate with that audience. Second piece is personal brand. And so I guarantee by the time you hop on a call with an investor for the first time, they're net new, they've probably already done a little bit of research on you. Maybe they looked you up on Google, maybe they looked you up on LinkedIn, they want to know your background even before that first conversation. What is that going to bring up for them? Are they going to find a photo from you in high school on Facebook? Or are they going to find maybe something from college that you haven't thought about in 10 years? The way you present yourself online is the way folks first interact with you before they even have that first conversation. So be very intentional about that. What's that personal brand that you want to do? For myself, we did 3 channels. We were we post all the time on LinkedIn, and it's actually one of our biggest sources of inbound. I've built a following, post a lot about real estate. Back when we were crowdfunding, it was all about how do we give the opportunity to invest in real estate at a very low cost, which was $100 a month. So that was the entire messaging. We were very consistent in posting daily and sharing education around that. Secondly, I'm a big fan of podcasts. I know this industry loves podcasts. Try to be a guest on someone's podcast if you don't want to do your own. And so that becomes a way, I'll get texts from some of our GPs just being like, hey, I just spoke with an investor today. They heard me on Groundbreakers and I immediately already had trust with you. I've heard you speak for 30 minutes. We've never even met before, but I recognize your voice. And so that's a way of building trust even prior to that first conversation. And then I'm a big fan of newsletters, especially if you're going to be investing in multifamily, assisted living, you want to feel like an industry expert. So put together a newsletter, talk about what you're investing in, why you are interesting. And then that, you can add every single person you're having conversations with to it, and then sharing that with them. All of this goes back to just building that personal brand. So do things that you find interesting, that you're going to enjoy talking about, but ultimately, build a good image around yourself. So when people first look you up, that's going to be what they see. The next piece is creating an investor funnel. And so this is so important. because you're having conversations with so many different investors. It's hard to keep track of who's where in the journey. And so I really broke it down into four different steps. So your first is like upper funnel, attract investors. As someone who's raised capital for both my company, for different deals, you're having conversations like with tens, if not hundreds of investors. Maybe you're lucky, you find some like a family office or an institution that's going to do like the entire check for you. You're one of the lucky ones. For the ones that are a little bit not in that same situation, you have to have a lot of different touch points with different investors. It's good to understand where people are in that funnel. And so a, a great way of first attracting investors is just creating something of value for them. Can you put together a passive investor guide that educates someone on how to even think about investing? Can you put together some case studies? So maybe a deal that you've done full cycle, like what the return profile was, or maybe another deal that you've read about, maybe some market reports. So you want to do something that just first provides value. Then as you get people down the funnel, like I put drip marketing campaign next, because after that first touch point, you want to start having multiple touch points with them. And so like a drip campaign is a great way of doing that. So maybe someone goes to your website, they want to learn more, they input their name, their email. Then, a day later, they get an email from you saying like, hi, John, I saw you put in your information. Here's a bit about me. Here's what we invest in. If you're interested, schedule a call with me. And then maybe that person doesn't reply. 3 days later, you send them a second email being like, hey, I saw you didn't open that first one, but you said you were interested originally. Here's another piece of value. You send things to them to people that are warm leads, people that are giving you their info, and you're kind of hitting them multiple times. At some point, they may engage, and then they schedule a call with you, and now they're going deeper in that funnel. Another big piece, like as you're educating people along that journey, big fan of hosting webinars and maybe talking about what the types of deals that you're doing, or like the asset class you're looking at. And that if you have the weekly newsletter, or if you have a newsletter of some capacity, you can add all the different folks giving you that information and sending them an email. And then last piece of that funnel is just actually closing them. So getting them to either a soft commitment, a hard commitment, and then tracking those conversion rates. Really thinking about this as a sales process. And so going off of that, what is the CRM that you have in place to track people along that funnel? And so like, here's like a very basic CRM setup where you maybe have like, the leads first captured, whether that's them downloading a guide, whether that's them giving you their email on your website, maybe they attended one of your webinars. Then, you're scheduling a discovery call with them. Who is this individual? What do they care about? Why are they even interested in this? What is their timeline of investment if they even have the disposable income to do it? Once you've had that conversation, now if this is like a sales qualified lead effectively. This person is interested and has disposable income and is looking to deploy in the next 1 to 3 months. All right, this person is going to be top of mind when I do find a deal. Another way of actually tracking who's very interested. So this is actually the power of an investor portal. A lot of times I'll tell our GPs, like, have a mock deal. You don't always have a deal that you have under contract that you're actively raising capital for, but you're probably always having conversations with investors, or at least you should be, because you should always have folks that are warm that you can reach out to. So have a place you can send them, have a place where they can actually type in a soft commitment for maybe the buy box that you're looking for. And then now, let's say you get like 500K in soft commits for 50 to 100 doors within South Texas. Well, when you do have that deal, you can now reach out to all those people that have put in those soft commits that are warm. And then hopefully some of those turn into a hard commit. So that's really just the power of a CRM, understanding like where people are along that journey. And then like that also allows you to understand where you're losing folks. What is your conversion rate across each of these different steps? Because if you have a conversion rate that maybe is incredibly low in one of these steps, and like, okay, maybe something's wrong here. Maybe I'm not doing something right with the conversation, or we're not attracting enough investors. But can't stress enough how powerful this is. And there's a lot of, platforms out there that do this. You can use an investor portal like they have it. You can use HubSpot, Active Campaigns, Go High Level. There's a lot of, pretty standard platforms to help with this. Then the last piece, and so goes back to like back when we were crowdfunding, something we found that was very helpful for us. We have conversations with investors, and I can't tell you the amount of people that verbally say like, I'm in, just let me know when you have a live deal and I'm going to commit. And then we did have a live deal. Only like 30 to 40% of those people actually converted. There's a million reasons why, the 25K they told you they had available is now not available. And so one of the best ways for us, at least, to get that conversion rate higher was having a place where they actually had to make an account, type in a number, like mentally get themselves over the threshold of committing. And we saw about a 50 to 60% conversion rate. So it was a big drastic change between having a place to actually lock something down versus just someone verbally telling you they're in. Doesn't need to be an investor portal. Could literally, if you have on your website like some form that captures it, that's very, very powerful just from a mental standpoint of getting someone to just mentally be like, yep, I think I want to commit to this versus just, appeasing you verbally saying like, yeah, I'm in. Let me know when you have something. Um, and yeah, so like what we do at Homebase, like our whole like what gets me up every day is trying to help our sponsors raise more capital and manage deals with ease. And the platform that we've built, I think, helps with deals end to end. We know that this can be incredibly stressful. You're managing a ton of different work streams, with having conversations with vendors, with lenders, with now investors, with the seller. And so we're trying to just help you centralize a lot of that information in one place. This is a quick snapshot of what Homebase looks like with some of the different capabilities that we have on platform. I'll dive more into that next week. But I think from this presentation, just really hopefully you're reflecting and being like, where am I in that journey? Do I already have all these systems in place? Am I missing some of them? Do I first need to start off with putting together who my investor avatar is? Or maybe you're at a point where now you're just building, some of the automations, maybe ideally using AI to follow up with folks, in an email sequence or something. So want this to be pretty interactive. If anyone has any questions, let me know. That's really the whole presentation from, my own experience raising capital and now working with different GPs on platform and then supporting them in their journey as well.
Yeah, hey, great. I love it, and I want to open it up because I know it's it's easy to listen to, but putting it into action is another thing. We do have fear. I don't know about you, but I get fearful of having these conversations with people and they say, "No, I'm not interested." Something that I thought was something that was very exciting, something that was going to create wealth for other people. And they're like, yeah, no, not interested. So I would be interested to hear other people. How has the capital raising been for you? What are some of the challenges that you've experienced? So, Sanjay, you're the first. I'm calling you out on the carpet here. How has your capital raising been? What have you done in terms of finding your avatar? Because I know you're probably going to engineers. I'm just saying, I'm thinking that's probably where you are. But kind of walk us through your success in doing that, and maybe how you have your fear factor has you've been able to deal with that.
Yeah, sure. And you're very correct. One of my avatars is software engineers. I used to be one. I know a lot of their psychology and a lot of their concerns and different things like that. So, I mean, 6 years that I was in their spot, right? So, there's a reason why I started investing in real estate, and that's one of the things that I talk to them about in terms of generating passive income and things like that. Um, and you talked a little bit about sort of the fear of someone saying no. Psychologically, for me, what I'm doing is I'm giving them an opportunity. It's up to them to choose to take it or not. It's not if they choose not to, that's not really a failure on my part. I'm providing a service, so that keeps me from mentally sort of going towards the negative about what if someone says no, you know.
How about this idea of it feels like a multi-level marketing scam. Oh, I got this opportunity for you. I mean, if
Um,
you are new, and Sanjay, I'm not, you don't have to respond, and this opened up to everybody, but if you've been new to this community of multifamily investing and you have somebody that's comes up to you, and this is your first exposure, and someone says, "Hey, I got this opportunity for you," you know?
well, one of the things I don't come out and say, "Hey, I've got this opportunity."
Okay.
What I do is I tell them what I've done, my history, what I've done in the past, and the reasons why I got into real estate, and I make sure that they know that I understand their point of view as well. And I, I don't necessarily say, "Hey, are you going to invest?" It's when they want to invest, they will come back and say, "Hey, do you have something coming up?" Or and that's when you start talking about any specific deal. It's one of those you don't if you start by saying, "I got this deal," and you're sort of behind the eight ball at that point, right? Because if it's one of those almost like any type of negotiation, the first person to say something is usually the one that in the lesser position, right? So, um,
So, Domingo, what are your words of wisdom on, it is about delivery of the information, making sure that it is about helping people, but that it doesn't sound like cheesebally. And some people go through these education programs and they're trying to help other people become wealthy, yet you're not wealthy. So you're kind of acting as if. So walk us through that, some of the challenges that we may feel that we're not really worthy of um, being an investor or being able to provide this service to someone else.
Yeah, I mean, that's always tough, right? Well, first I'd say like you get a ton of rejection in this business, and raising for both real estate, raising for startups, which is what Homebase is, like you get told no hundreds and hundreds of times, and taking that personally is going to be very, very difficult. So like the first thing I want to do is disassociate yourself from from the deal. It can feel like it's your life and you're doing everything you can to raise for it, but just know that like every no is not something that's an attack on you personally. It's like, hey, maybe this is not the right opportunity for me right now. And so just want to start off by saying that because it can feel very personal, especially as you're having a lot of conversations. On the piece around like, you're selling me this dream of, I'm going to be super wealthy and like, here's an amazing outcome for folks that invest in real estate. Like, I'm a very, like, I try to live very genuinely and very authentic. That's probably not how I would be pitching a specific deal personally. So everyone has a different pitching style. Given I'm not wealthy, I'm not going to be telling you like this opportunity is going to make you wealthy. I'd probably say like this opportunity is going to make you money. And like, here's why I'm excited by it. And I would also probably not do something that I was not an investor in myself. The two deals we syndicated, I was also a part of. And so that's almost a way of kind of getting around that of like, hey, I'm not wealthy, but here's what I'm doing. And if you want to follow me in that journey, like here's all the education and all the insights that I have as to why I'm excited by this. And you're a good friend of mine, or you're someone I met, and I want you to have that same opportunity that I'm pursuing.
I love
So
that.
that's how I
That
frame the conversation. Yeah.
Yeah, that feels much more comfortable to me. Todd's got a question.
Yeah, first, hi Domingo. I saw your name in Julianne's email. I had to come. I haven't actually been here in many
Yeah.
weeks, so nice to be back.
Oh, great to have you.
So yeah, Domingo, you made a very good point. I read a book recently called Go for No, and if
Mm,
people haven't read it, absolutely I recommend it. It really the my key takeaway was every no is one step closer to a yes, right? And where I'm at in my journey is I'm an investor, but I got into my first syndication last year, and at the end of September, I've been doing exactly what Domingo has on the screen here, right? So if I was in the tech industry for a while, like Sanjay and Domingo, you were at Google as well. And
Yep.
so my investor avatar is my former self, somebody who has a lot of money in 401k or most of their savings in 401k, and maybe doesn't understand self-directed IRAs as as a way to invest in private equity. I have a ebook that people are downloading, so hopefully that starts converting to it's called From Silicon to Syndications. It's a flashy cover too. I like it. But hopefully, that'll end up converting some interested people through education to potential investors. And if you're interested in downloading it, I'd love to get feedback and make it better. The big hurdle I'm facing now is the rest of the machinery. I have a CRM, but I'm not a marketing and salesperson. And so getting to know what the features are of a CRM and getting, like, I have a paper notebook to my right here, and I take all of my notes in my paper notebook, but then I have to transcribe them to my CRM. So using the CRM capabilities is not in my muscle memory, and I have to change that to make the follow-ups and whatever, finding the information, remembering how many kids people have and that kind of thing, to make that all easier. So it's a work in progress.
Well, I love that you are putting that in place. And it takes some gumption to be able to say, this is what I want to do. These are the steps I'm going to take. And in this marketplace, it's taking longer to build the drip campaign, to get the lead magnet, to get the attraction, to have the conversations. It's a lot of determination. So great job, Todd. I'm really proud of you. Nicholas.
Hey everyone, it's also been a couple weeks since I've been to Zoom at 8, so also glad to be back. I had a question. So I'm working to, develop my leads. So right now I'm like reaching out on LinkedIn a lot, trying to post content, but I'm kind of struggling to get a lot of traction. Like I'm getting some responses from people, but it's kind of seeming it's more in like the 10 to 20% people are actually responding to my cold outreach, or maybe even I'm getting some attention on my LinkedIn post, but I'm not really booking any meetings or getting people's info from that. Do you have any suggestions of like ways to up that conversion rate? Like maybe some specific way of content that you're creating that was getting a lot of traction? Just didn't know if you had any recommendations of things that have really worked well for you.
Yeah. So 10 to 20% cold outreach conversion is actually quite good. So that's very high, I'd say, for
Okay.
cold outreach.
Okay.
In terms of just like what you can do. So personally, like when I was posting on LinkedIn, I didn't see any inbounds and probably until 6 months in of posting almost daily, just to kind of give like level set in terms of expectations of what that
Okay.
looks like. So back when we were raising for our deals, like, the first one's probably going to be like mostly friends and family and extended networks. And then you prove that out, you showcase what you can do, and then you start using that as a case study for then future ones, and then start sharing that with a broader set of investors, and then have something to point to with folks you don't know as well that maybe don't trust your personal brand yet, to get that second or third deal to the finish line. But I'd say like just like I'm a big social media person. I see that as a channel. Not everyone does. Some people go to conferences, they find JV partners there, they find co-GPs there that are going to help them raise capital or like put a deal together. Like just for whatever reason, social media has worked for us in the past. So like that's what I'll continue to do. But there it's really just like first of all, understand who's the investor profile you're going after. So I don't know your background, but let's say like maybe you were in tech also in the past, or like whatever you're doing before, that's the investor profile you want to target. Put content that you think those folks would find interesting. Like if you wouldn't find your own content interesting, like do you think other people are going to find it interesting? Not to say that you aren't, but just kind of like throwing that out there. And then just posting consistently around that messaging. And then at a certain point, like you want to almost like I'll just speak to like what we did back in the day. Like my LinkedIn, if you go to it, is almost like a website landing page where it literally has like a call to action, which is book a time with me on, a little link there. My cover photo is basically like, hey, here's all the sponsors we work with and what we've done. Maybe you can talk about what you're actively doing. I educate investors, or I help people invest in multifamily. X thing that I'm doing to help people save time and effort. But I really just say it's just consistency, and in the short term, friends, family, and broader networks through introductions.
Yeah, that makes sense because that's where I'm at right now. I've done 3 deals and all the raise was mostly from family and friends and just extended networks. So I'm like trying to leverage those deals that I've done to be like, hey, these are deals that we've done in the past. They're panning out pretty well for the investors, and this is the type of deals that we target in the future. So that makes sense. I guess it's just continued, keep at it. It seems like it's just one of those things we got to keep at it and not give up.
Keep at it and ask for intros. Ask for intros from your investors. Hey, there are other folks in your network that want opportunities to this. And then like intros go a really, really long way. Or try to find other people to help you with the raise that also have networks that maybe aren't as tapped out in terms of, giving you capital, or JVing together on a deal with other folks.
Mm-hmm. Awesome. Well, thank you.
Yeah, thank you. Domingo and everybody else in the room, do you like when somebody connects with you and then sends you a message? I absolutely hate it. Like, you've connected with me, you really don't know me, or somebody just sends me on LinkedIn a message, not even connected to me, and hasn't even really looked at what I do. And or what they're doing is they're having their VA pull everybody, scanning everybody on the internet that says they're an investor, and then they come in and try and find out if I want to invest in their deal. So I have some of the scar tissue of how I feel when somebody does that. And so for me to reach out through LinkedIn, I don't like it. I don't like it. I don't want to do it. I got to get over that fear. What are some words, again, Domingo, or anybody in the room, that you've had success in? I know that LinkedIn can be a great, great place, but it's just overcoming that.
Yeah, I'd say like if you're not comfortable with social media posting, like you absolutely don't have to do that. And once again, I'll probably go back to like, okay, how do you build this investor base? Either through conferences and meeting folks investing in an asset class similar to you and finding partners you can work with. Some folks have joined mastermind communities that may or may not be for everyone just because of the amount of money you have to, put up front to join. The counter argument to that is everyone that's there put up that amount of money to join. So, they're very committed to making this work for them and working on deals together. And so finding partners in that capacity, like that probably, or like asking for intros between your investors, friends that they have that want to invest. And like, we see that goes a long way with some of our GPs that we work with. Um, to answer the other piece of Julie of like getting over the uncomfortableness of posting, I think at a certain point you just have to stop caring what people think, and that was something I did. Of like, it feels really cringy to do it, and like I've just fully owned it at this point. I'm like, I don't care. This is my business. Like I'm gonna give it my all, and so like here's just who I am. And if you don't want to associate yourself with me, that's fine. But I try to be very genuine with what I post, and so the stuff I post, I try to be valuable for GPs, but you would conversely try to be valuable with what things you post for prospective investors in your investor profile.
So this is more so of a message that somebody sends, a DM, really.
Yeah, if I can chime in.
Sure.
I iterated on this quite a bit, and one thing I hate is I hate getting a message as soon as I click the connect. Then the
Yes.
message comes right away. Then I know it's a bot. It's automated, right? So
Mhm.
I send a message. I'm connecting to four kinds of people. People in the semiconductor industry, people in the AI space, because those I have professional experience in both of those. MIT alums and University of Texas alums, because I'm an alumni for both of those, right? And so we have some common ground already. And when I connect with people, I actually automate this, and I'm not sure how I feel about automating it, but so far, I'm getting replies. Okay, at some percentage, I'm getting replies, but each of the messages is is related to that common ground. Hey, and I iterated a bit in how I reach out to people. Um, it used to be, here's what I do if you want to learn more. Let's talk about investing, or what are you interested in? I don't do that anymore. What I do is say, here's my background, here's what I do. Um, I captured some of this learning in an ebook. If you're interested, it's in my profile, right? So I'm not selling anything. It's just kind of like a, hey, we have this common ground, and if you're interested in learning more, check out my profile. I'm not asking for a phone call or anything else. So it has materialized into some calls and some longer communication chains. I'm not completely satisfied with the capture rate, so I'm thinking about maybe continuing to optimize it. But that's where I'm at.
I like it. Great ideas. I
Yeah,
feel you make Todd, the way you just present that makes me feel comfortable, makes me feel like I don't feel at a defense on defense. So I would think that your people that you're reaching out to would also feel a sense of calmness the
Yeah,
way
it's
you're doing
I'm
that.
not asking for anything. I'm just saying, here's me. If it interests you, you can find out more, right?
Yeah,
Yeah.
yeah, I like it. Anybody else have any comments or questions for Domingo and how, what you're doing that he might be able to help steer you? Success stories? Tia, what about you? You're capital raising. You've been on the fast track to getting investors. You've been very successful. What do you think? Are you doing this type of campaigning? How are you,
Well, first off, I came in late.
connecting?
But
Okay.
so I didn't hear the whole first part of this. But I mean, here's the thing. Luckily, we've kind of stumbled upon a company that wants to finance, bring the capital to all of our deals. Now, I don't have anything to report as to how successful this is yet, so we're stepping into this, and we're just sort of looking over their engagement letter and, doing our kind of redlining on that. And in all honesty, it's kind of a relief. I'd rather have one person do the whole thing, and I don't want to do it.
Totally.
And it actually does make more financial sense than it is doing the entire syndication route.
Yeah, I completely agree. And you're lucky for that. And that would be optimal for all of us to be able
Yes.
to find a high net worth individual.
Yes.
Brock might be able to help on those kinds of things. And, you know, I, I think it's who do you know? It's the who and, right? Isn't that how it is?
I also think it's the deal, because some of these places are not going to want to touch certain things, and understanding like where to go with what
Uh-huh.
kind of deal. And, when they have like family offices and they have bigger companies that want a certain level of, return, I think that's where, having that in your back pocket for us is a really good thing. But I know that there's going to be other things that might be more risky that we would probably have to go that route.
Yeah. I mean, it's like do you want to have 3 kids or do you want to have 70 kids and answer
Yeah.
all 70 kids? Are we going to play all together with 70 kids, or are we going to have a nice tight niche of people that understand how we're managing these properties? So
Yeah.
always the least amount, the better. So, and I think that's also what I want to really get a understanding. And, I think it's over time. How do we find these big investors? How do we make 4 or 5 phone calls to big investors and they're like, yes, let's do it, instead of a bunch of ground squirrels? That is, you find that and I'll pay you a lot of money. Help me out here. So, all right.
I can, if I can say something about that.
Yes.
Look, I mean, I think if you come to look, I don't really do, I don't do cold callings, right? I don't these are people that I know for, 10, 15, 20 years
Yes.
already. It's not the people necessarily that come to me from a posting, right? So So it's much warmer, and the relationship and the trust is right there. We said already that the trust is more important than the deal, right? So that's something. I mean, look, it took me 27 years to become an overnight success like that, but it's really so it's that kind of trust now. I started talking to those people. Okay, they knew me for years as somebody who helped them buy and sell their apartments, right, and their homes. But about a year and a half ago, when I started thinking about multifamily, in every conversation, then I usually talk to these people on a regular basis, right? Because I always check in and I keep in touch, and I have a database, I have a CRM, and I keep in touch with them on a regular basis. I have a newsletter that I send twice a month. But granted, it's not about multifamily syndication. It's about my brokerage activities. But they hear from me, and I speak with them on a regular basis. So I started implanting into all those conversations. Hey, I'm also doing this now. Okay, and I started doing this way before I even had a deal. Okay, just to warm him up and tell him that this is what I'm doing and this is what you could expect. I can even, go as far as doing like a mock deal, something that's already in contract, something that's already sold, but these are the expect, more or less return. This is how the deal is structured. So, I do this on a regular basis when I speak to people. Not like when I have 30 or 60 days, with the clock ticking after I'm in contract for something, right? And then I try to find those people, started from scratch. So I think this is, the keys to develop the relationship is, as far in advance, not only when you have a deal, but, on a regular basis. And then when you have the deal, they're much warmer. And I think the conversions are much higher, obviously, than a cold lead through LinkedIn or social posts or whatever you have. So
Good,
that's
very, very good points. And
yeah.
I'm sure when you're capital raising, you will be quite successful. And it's because of all of those reach outs, hand holding some of these folks. They've seen you be successful for them, and you would only do them right in the future. So it makes sense. Great,
Yeah,
great
and I
job.
also know I know exactly the net worth and the capabilities of pretty much most of them, because anybody who ever buys something, I look at their balance sheet, right, their financial statement. So I know what they have, what they're capable of. I know what they're investing in already. So I really have good, deep relationships with those people. And it's again, it's a question of trust, and sometimes the type of deal that I have at that moment may not work for them, may not work for many of them, but still they know that I'm a trustworthy person. They know I've handled their affairs in the past well, and when the right deal comes that works for them, it's not a shoe-in, but I think it's the ratios, right? The closing ratios are much better.
Yeah, good
Yeah.
point. All right, let's wrap this up. Domingo, if someone wants to get a hold of you to talk to you further about this information, you've clearly been able to do this for yourself. You're going to be coming back next week to walk us through your product. But in the meantime, how would they get a hold of you?
Yeah, so you can find me on LinkedIn. It's just my first and last name, Domingo Valadez, and you'll have my calendar link there on LinkedIn. So if you want to book time, happy to chat more. Um, and I'll also share the playbook in the chat. So we actually have this entire playbook broken down, even with like drip marketing campaign templates you can take. We even put together a free like investor guide that you can probably take and personalize. So I'll share that as well. And my contact information is at the bottom of that.
Okay, perfect. So I think that's where we'll leave it for tonight with Domingo in our presentation. But we're going to go into a breakout session. And thank you, Domingo. I really appreciate you sharing your insight with everybody here. And it's just getting one step closer to capital raising.